and within Motilal Oswal itself. Joining me, I have the Managing Director of the company, Mr. Raamdeo Agrawal. I have Navin Agarwal, who is the MD, MOFSL, and I have Rajat Rajgarhia, the CEO of Institutional Equities. So whichever way you look at it, whether it is research, institutional equities, retail investors, they've all come and joined us just on the eve of the 11th Motilal Oswal Investor Conference. It's a global investor conference and that's where a lot of pain is coming for India. So let me kickstart the show precisely by asking Raamdeo that question. Raamdeo, the globe is the one that is creating the problems for us. India really is a shining star in this space. Are global investors still excited? What was your preliminary reaction when you invited them for the conference?
So excitement is very high. We are seeing highest levels of participation, particularly the bigger groups are coming in hordes. So that Navin and Rajat will tell you who all are coming, how many are coming. But this time what we are seeing, the difference is that there is of course drop in the market, the global macros are moving here and there, oil is moving, currency is moving, commodities is moving, everything is with the chaos all over, perfect chaos. So, but in that there's no fear. People have gone from here, but they're not fearful. They're not panicking that, okay, whether I'll be able to sell or not. You know, even the IOC deal, it just got done. And in 2 days, stock is 10% or 7-8% higher than the issue price. So I think there is no fear in retail as well as the foreigners. They might be going because there is a macro call that people should withdraw from the developing markets or whatever issues. But I don't see fear. I think they'll be able to tell you much more about that.
I mean, that's itself a very, very good beginning. That at a time when they were looking to sell, there was no problem at all.
Yeah.
Navin, on that point, what exactly is the nature of participation? So you can give me some color on how many FII investors, how many corporates, some color on who will participate.
Yeah, so in terms of the participation, the number of companies who are participating in the conference will be about 125 in numbers versus about 110 that we had invited the last year. In terms of the investor participation, the numbers are about 700 institutional investors, both domestic and foreign. But the big difference that we are seeing this time around is that the kind of investor, the nature of the foreign investors who are coming in are more long-only investors. And we are seeing, as Raamdeo ji just pointed out, we are seeing larger groups of those long-only investors. So there is one fund with 10 analysts along with the CIO coming in, the other with 12 analysts and the CIO coming in, and that is what is taking up the overall number of the offshore participants this time. So more long only and larger teams to dig deeper into the markets.
Okay. Rajat, there is a problem with the way the global economy is panning out. So what is keeping these investors, Navin is talking about more long-only funds and more participation from each of those funds. What's keeping them excited about India?
I think there are three factors. First, in this period of slowing global economy, global investors see India as one of the best destinations where the resilience to the global forces are the most. Okay. Second, India has gone through its own pain of slowing domestic growth over the last 5-7 years. And ever since this government came in place, we have seen various signs of things just about to turn better. And third, I think the way RBI has handled the monetary policy framework over the last 2 years, today when the whole world is worried about currency, India is today much better placed in this entire period. So I think people are realizing that India is truly a very, very long-term destination, and that is evident in the way the large global teams are participating at our conference.
What's, Raamdeo, your sense? Rajat has been saying that India looks like a resilient picture, but there is a lot of pressure on the Reserve Bank to cut rates. There is the other end of the spectrum saying that, he's the guy who's standing in the way. You buy that? You think that Rajan can make your story look much better, or he is making it look worse?
No. I think his presence itself is a fantastic thing for, kind of entire story, India's story. Because, see, today we are tackling a lot of uncertainties. Commodity prices, China, US rate rise, then our own reserves, our own falling exports. So, whole lot of issues are there. And yet, currency has to be stable, because currency is one thing which is a reputation of the country, and it translates everybody's sales or purchase in particular way. So currency is stability. I mean, stability doesn't mean that it should not go down. You know, very gradual reduction, devaluation vis-a-vis your intervening currency is also stability.
So it's not difficult for you to sell the India story. You don't repeatedly say that, but your rates are not coming down. You don't get that kind of resistance.
See, first thing is, we are not big macro guys. We are bottoms-up guys. I'm more concerned about total corporate profits, as we were discussing before the interview, than whether interest is up by 1% or down by 1%. I mean, we know that broadly trajectory is looking to be lower, but whether it happens in September or next September or May or June, I mean, we don't sweat that much on that.
Okay. All right. Let me come to the design of the conference itself. Navin, how did you all plan this conference? I'm told from your copy that you have catalysts, enablers, participants and beneficiaries. Beneficiaries I can understand. I guess they are the FIIs or the investors. How do you categorize the other participants?
Yeah, so I would broadly split this into three parts. The first is the bulge bracket, the biggest corporates of India. So you have Vishal Sikka from Infosys, who will share his views on technology. You have Akhil Gupta from Bharti. You have Sanjeev Mehta, the CEO of Hindustan Lever. Chanda Kochar from ICICI Bank. Puneet from Z Enterprises. And a whole bunch of these big market leader companies who will present their views on the businesses and how the businesses are doing, right? So that's one side of the story. The other side of the story is the non-corporate, you know, the bureaucrats, the politicians. So we have Mr. Mohan Bhagwat, the chief of RSS, giving his perspective, you know, on politics, on reforms, etc., which will be very interesting. You've heard Mr. Modi speak about reforms all the time. We've seen Mr. Piyush Goyal. We had Mr. Gadkari the last time at our conference speak about this. But
whom do you have this time?
So we have Mr. Mohan Bhagwat on one hand. On the other, we have Vinayak Chatterjee to speak on the infrastructure space. We have Janmejaya Sinha, who's the Asia Pac chief of Boston Consulting Group's present. We have Anil Swarup, the coal secretary, you know, who's presenting, and a whole bunch of these non-corporate speakers. So that's the second leg of the conference. And the third leg is about 35 to 40 very interesting and promising bunch of investment ideas, bottom-up ideas, where we see, you know, in the midst of this gloom and doom on corporate earnings, a possible 20-30% compounded earnings growth. So very exciting, bottom-up, you know, interesting ideas. So those are the three pillars on which the conference is standing.
Fair point. You know, you also have Suresh Prabhu, the rail minister, coming in. And as you said, Gadkari has also spoken in the past. You know, Rajat, we're not going to get much help from the globe. The global piece or the export-led growth is not going to really happen in a hurry. We were expecting government pump priming, and that's why I guess you have called the rail minister as well. Just setting aside the conference itself, are you getting a little disappointed by waiting and waiting for government spending? Are you seeing it on the ground at all? Yesterday, the analysis of the GDP numbers left the government numbers a little weak, actually.
See, one of the problems that we all face in the market is too much over-analysis of data, which comes very regularly. But we look at it in two ways. Too
much of media, I guess.
Yeah, we look at it two ways. If you look at the aggregate fiscal deficit numbers, the number is, while coming down, the composition of the deficit is shifting significantly from the non-plan expenditure to the plan expenditure. And plan expenditure is the government spending. And secondly, if you look at the book-to-bill ratio of all the capital good companies in our universe, they are at a 15-year high, right? Today, because we are into a slowing mode, many of these numbers are not making so much of excitement. But I think these are some very early trends. The government has begun this year with spending upfront. We will see this pace only picking up, and the second half numbers will be better than the first half.
Okay. Fine. You know, that's still a matter of contention. There are some people who argue that this government has lost its ability to spend. For about 5 years, they've only been given doles. They have not put new tracks, not built enough roads. So the ability of the government to spend itself is under question. You don't quite believe that argument?
Well, I think the last 5 years, if you were to talk about, of course, we have had our own share of issues. We are more focused on the last 6 months of actions that we have been seeing.
Okay. Well, I know, Raamdeo, you're actually a bottom-up investor and you're not a man for macros. But still, ultimately, even your bottom-up picks are operating in a situation where the consumer has to consume. In those companies, in those, 50% of India, which is domestically focused on consumption, are you seeing any positivity at all? More paints being bought, more tiles being brought, is that there in the numbers?
There is very select pockets. I mean, clearly the choices are reduced to very few companies, and by the quarters, it has been reducing. Good thing is that my strategy is very focused. So I'm not looking at 60, 70, 100 companies to perform. I mean, we typically have about 15 to 20 companies. So in that, even if I get 10 right and 10 dud, sorry, 7, 8 kind of not performing so well, I think we'll still do fine. The point is, it is becoming very challenging to find new ideas, but in every 3, 4 months, 5 months, we keep getting one nice idea. Like last one we got was all the oil companies, which is still happening. So that growth is yet to pan out full. Before that, some consumer companies whose margin expanded because commodity prices fell. So some theme or other will keep coming. And let me tell you about macros also. The world might say that this is the end of the global economy. So the economists all over the world put together, they always announce every 10 years end of this country or this economy or the world has come to an end. 2007-8, I remember, I mean, when I was in US speaking in Wharton school, I mean, it was looking as if they're literally standing at the end of the world. Where are they today? So let's be a little optimistic. I mean, our capex will start. I mean, Indian economy will come full force. I mean, someday, maybe it may not happen in next quarter or next year. But investing is not about next quarter or next year. We are talking about 5 year, 10 year. And you are still staying with the good companies, which may be growing at 20%. And will it grow at 30%? Yes. I mean, the time will come when the boom will happen. It has happened 3 times, 4 times in completely unexpected kind of, in 2002-03, when I literally thought that India has come permanently to the standstill. What happened? We got the biggest bull run. So I'm optimistic. I hope things will turn around. You see, who knew that oil is going to go to $55? In 48 hours before, it was $42, and it was looking as if it is going to 30. Today, in 24 hours, it has turned around to 55. So nobody can predict this thing. Let's hope that everything will fall in place. Macros will fall in place. Micros will fall in place. We'll get enough ideas and we'll make decent amount of money.
No, fair point. Navin, this time you have one other interesting story to sell. The domestic investor is returning. Can you give some color on that? Is that making you more confident? Is that making the foreign investor more confident?
Yeah, so it is quite interesting, Lata. If you look at the last decade, the value of the amount of money that the domestic investor invested in equities, so you can split this broadly into 2 parts. In the 7 years ending March 2010, which is when the markets peaked, right, at about 21,000 Sensex, domestic investors put in about $30 billion into equities at the rate of about $5 billion a year. So the overall financial savings was about $120 billion, and they chose to put this much money into the markets, right? Markets collapsed. That $30 billion in the following 5 years ending March 2015 was sold at $20 billion. So effectively, you had a lost decade of financial savings channelization into equities, right? A decade of domestic public holding in equities actually falling year over year, and foreign investors holding rising. The domestic investors, a lot of them are rear view mirror driving. So you look at the rear view mirror returns on gold today, you look at the rear view mirror returns on real estate today, and they're both looking ugly. But the rear view mirror returns 12 months, 18 months on equities are looking very good. So we believe that on this new base of financial savings of about $200 billion run rate now, easily 5, 6%, 7% can be channelized back into equities. And this is not a forecast. If you look at the last 5 months, the DI buying of equities is already $8.5 billion. So we are staring at a possible $10 to $15 billion run rate of domestic buying alone. Now, you can divide the foreign buying or selling into 2 parts. There is the emerging market hiccup right now, and you're seeing redemptions in emerging market funds. and money has been taken off the table from the Indian markets as well. We had $2.5 billion of withdrawal in the month of August. Now, you could have a month or 2 or 3 or maybe 6 months when you have domestic institutions buying and foreign institutions selling. But you look at the 10-year picture, India is an underinvestment for, global money. So we see foreign investors continuing to be long-term buyers of equities. On the other hand, we see potential $10–15 billion of domestic savings being channelized into equity. So it is looking like a very interesting situation. You have this 3–6 months of global volatility, emerging market redemptions, India sell-off by foreign investors. But if you extrapolate and look at maybe 2–3 years out, I think the situation looks much more interesting and very different from what you saw in the last month.
Time permitting, I'll come back to this theme. But Rajat, surely all your investors are going to ask you, what should I buy? What do you tell them?
Well, you have to buy stories which are still growing well and where you are still able to buy them at valuations which leave room to at least play the earnings growth, right? Look at private banks, right? All of them are well capitalized, still growing at 20% in a 5–6% GDP growth environment. You have many of the consumption plays like Maruti, which is at the beginning of a volume growth operating at a high margin. You have some of the cyclical recoveries like commercial vehicles. This is just the first 6 months, and one of the biggest themes to play in this cycle will be the oil marketing companies. In the quarter that went by, the 3 oil marketing companies aggregate were almost 10% of the corporate profits. I don't think people have seen that number for the last 1 decade also, right? So let this cycle start beginning to play. Many of these stories are only going to get bigger and better, right? And these stories will, more and more stories will keep on developing, but I think there are enough domestic plays for people to position themselves in the market now.
Raamdeo, did he miss out anything?
No, I think the difference between the short term and long term, short term is, as it is said, it is voting machine, and long term is weighing machine. I think that aspect must not be forgotten, particularly at this point of time. There is going to be so many, stones coming into the market from completely unknown sources. As I said, now China cannot scare us. My sense is
it cannot scare, but
yeah.
Global growth is still a big engine. For instance, auto ancillaries, or even Tata Motors selling, Jaguar Land Rover in China, or for that matter, the amount of we export to the Middle East. It takes away something. So, which is, do you think the Indian growth story can overwhelm this big negative coming from the world?
Yeah. So, if you see look at aggregate. Every company will have its own trajectory. Like for one Tata Motor, iShare is doing very well. So they are growing at 50–60%. So I can keep giving you, say Maruti is doing very well, 50–60% growth in the earnings. So you can have these kind of arguments about micro versus micro. You have to see, this China is a big gorilla. This is not a small. This is $10 trillion out of
50% of increment in
75,
GDP.
and almost 1/3 of the global growth was dependent on China, and that's slowing down. Clearly, world will be a little unstable. So you have to see how you protect your portfolio out of that. And actually, there is a chance that you can benefit out of that. See, there are companies which are hurt badly. Say, steel companies are very badly hurt. Aluminum companies are badly hurt. Iron ore companies are badly hurt. Coal companies are badly hurt. But the users of these commodities, they are very hugely profitable. Like say, iShare, now, or Maruti. These auto companies, they use what? Steel, aluminum, copper, plastics, all of rubber. All of these things are formed by 30, 40, 50%. Tell me which car is available to you 20,000 rupees, 30,000 rupees cheaper? Nothing. They have raised the prices recently. So obviously the margins are expanding. So you have to be present there. You have to be a little opportunistic. And some of the consumer companies whose sugar prices are down, wheat prices are down, vegetable oil prices are down, packaging costs are, packaging is very big. Packaging cost is very down. Your transport cost is down. So there is a combination of 7–8%, 9% volume growth, 4–5% price growth, and then margin expansion. So you have to work out where exactly is the benefit. It's not a, you touch anything. See, market is not giving opportunity just because you have written the check. Market is not under obligation to give return. So all the index hoggers. See, the problem is in the index. Index is mix of...
Exactly.
Yeah.
So let's not look at the index. Would you therefore look at exactly the companies you said?
Yeah.
Is auto ancillary the place to go? Would Motherson Sumi, suddenly you see this 10%, 11% month to date fall in August. Would those be the buying opportunities?
I mean, I don't buy because something has fallen by 10%. I mean, we
No,
will
but
go by
it
our
also
own...
ticks your boxes in terms of benefiting from...
clearly, I mean, if something becomes cheaper, say if I was buying Maruti and if it instead of 4,500, if it comes at 4,000 or 3,500, it's better for me, no? My investors will get at cheaper prices. So what I'm saying is, investment selection is not because it is just because it has fallen a little bit.
No.
You know, something is falling even 30%, I will not touch it because it's not falling into my QGLP
So what I'm
process.
asking is, would you prefer now that more money could be made in the mid-cap? So that's where people burnt their fingers. For instance, you know, commercial vehicle. You spoke about Ashok Leyland as an obvious winner. But should people rather look at, say, Atul Auto, a smaller player, but...
I would not... What I'm saying is, if something has to sell for 500 rupees in 2020, okay, today if I buy it 100, I'll make 5 times. If I buy it 50, it will be 10 times. You know, see, in 2020, what is going to the price is that is set. You can't change that price. Now, at what price can you buy? Can you buy at 100? Can you buy at 90? Can you buy at 80? I will always prefer 2 rupees cheaper.
Well, you know, I'm still coming back to the global because, you know, the retail investor is still coming back to the shorter term because the retail investor can be scared off. Do you think, Navin, that things can get bad enough to scare off the retail investor?
Yeah, absolutely.
I mean if they see 7,300, if they see 7,400, first of all, will they see it? Or do you think, at least going by your experience, that and going by the flood of retail money, that 7,800, 700 will hold?
Well, so if you look at the list of negatives, Lata, there is no dearth of them. Indian corporate earnings are getting downgraded, right? Currency is volatile, it is seeing lows every passing day. Foreigners are selling. They had the biggest selling in the last 7-8 years in the last month alone. Indian monsoons are not looking very good. You know, water levels in reservoirs are running low. So I have a list of a dozen negatives. Will that take the markets down? Possibly. But my own track record of getting short term is very, very poor. So, you know, I'm probably not the best person to answer that question.
All right. No, what I'm saying is, you're speaking to a bunch of investors, you know, to people who have a lot of experience of seeing several business cycles. Are they giving you that kind of scare, or are they more like Raamdeo saying that now all the devils are out, they're known and they're out?
Well, you know, so I agree with you there that what has happened lately in the last 1 or 2 months because of, you know, disillusionment with the high expectations of reforms that were there on one hand, and the global volatility on the other. We know investors who like a stock, who want to buy it at a particular price. That price is seen on the screen, but they want to just procrastinate, just wait and watch, because their existing portfolio is losing money. So we have seen even long-term investors, people who believe in the long-term story, who have conviction in their ideas, also now holding back. And I think that is not a good sign, and that is something that needs to be addressed. So I agree with you that withdrawal of buying, which is usually what catalyzes a fall and not just selling, is something that is becoming more pervasive even among the believers, is something that at least I have personally observed among multiple investors in the last few weeks' time.
Okay, that's a bit scary. Navin, sorry, Rajat, one of the news we got over the last 24 hours is HDFC Bank cutting its interest rates by 35 basis points. Now it is a substantial fall, you know, 3/4 of a percentage point fall in lending rates. Are you getting, could that be that push for consumption?
Well, when I saw the media today comparing the base rates of all the banks, I thought it's really commendable that the bank with the highest net interest margin has the lowest base rate in the system. So that speaks very well on how to manage.
He's the one who will start the challenge.
Yeah, but I think this also serves as a good message to Dr. Rajan, where he has been advocating for the last 3 months that banks need to transmit the previous policy rate cuts into their own policy rate cuts, right? I think that process has begun. This is a festive period when typically banks like to prop up their retail products, right? And I think as long as you are able to manage your cost of funds and credit cost, which no one does better than HDFC Bank, right? I think rates will keep coming down, right? I think the environment is just getting conducive for Dr. Rajan to just come and give a festive gift by doing another rate cut. HDFC Bank has just kind of created a favorable backdrop for that.
Oh, right. That had to come. But Raamdeo, I'm sure you're going to sell HDFC Bank to your investors. Will you also sell Hero Honda? What else will you sell to them? I mean, will you still sell Hero Honda? The challenges for that company are there.
So we are already fully invested, and
you are fully invested, but you would still think that there's space to invest.
Yeah, my sense is market goes lower. It's actually a good news. Okay, it unsettles most of us. We don't want, I mean, including me. I don't want to see a lower price. I want to see higher price because it feels nice. But actually, people are yet to come into the market. So if the stocks are lower and foreigners who benefited significantly in the last 5-6 years, they bought it and domestics they sold it. This is the biggest story. Okay, now just the tide has turned where domestics are buying and foreigners are selling. I only hope they don't. I mean, they don't get tired in this 78, 77, 8,000, this, you know, this short-term gyrations, and they stop. They start selling, and foreigners start buying.
So they have to keep running till they can pass on the baton to the foreigners.
I hope they get. I mean, the foreigners get tired of domestic buying, and finally they come in, and then both of them they take the market to a different levels.
All right, Raamdeo, Navin, Rajat, thank you very much for joining me and for giving me an idea of how your conference will pan out. Have a great conference out there. And I think for us viewers, I think the big lesson is that there are a lot of optimists out here very eager to sell the India story. And according to them, of course, there are more number of deep-pocketed investors who are coming with greater interest into the conference. We will, of course, touch base with them after the conference to check whether it has indeed been as successful as they are expecting it to be.